Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Welcome to another special edition of the Wheelbarrow Profits Podcast. This is your host, Jake Stenziano, alongside my co-host, the Renaissance man, the father of six, the multifamily real estate investor, a.k.a. G. Diddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, you're bringing the pain already, huh?
Always making it happen, big man. Today we are embarking upon our third special edition podcast entitled The Gateway into Multifamily Real Estate Investing. It's now time to focus our attention on the credibility factor for you as an investor and what steps you need to take to run with the big dogs. We'll also cover how to leverage your new business strategies and plans to create wealth.
Guys, you're going to be speaking to brokers and bankers, and your level of energy needs to be raised. So I'm going to take a little different tack today and not talk about real estate for the first 2 minutes and just give you a little bit of life coaching here. As you can hear Jake's voice and the energy and the passion that he has, this is what you need in your business and your daily life. Now, sometimes we perform at lower levels of energy. We have to get that level of energy raised. We want to be passionate. We want to be engaged in life. Let me go over what the 7 levels of energy are, as taught to me by IPEC, the Institute for Professional Excellence in Coaching. Let me start at level 1. Now, keep in mind, none of these levels are good or bad in a sense. You're going to see that all 7 levels, you're going to need them all throughout your life and all throughout your day. And you do not resonate at any one level. You're going up and down like a yo-yo every day. But you'll see the great ones, like any kind of leader you want to think of. Guy at Apple, you want to think of anybody who was a great leader, you're going to see they're resonating at the levels of 5 and 6. So let's start out. The first one is apathy. Someone who's apathetic goes through life is a victim. That's basically their core thought. Their core feeling or their core emotion is they're being apathetic. I don't want to do this. I'm a victim. Everything always happens to me. We've always been through that. We've always been there in life. I mean, Jake, how many times has that happened to you? Guy doesn't show up at work. Always happens to me, right?
Well, the employees especially, it was because of this. There's always the excuse. It was because of that. It was never my fault, right? That type of mentality.
Exactly. And that's the result you get is you're lethargic. That's basically you're sluggish. You're not being engaged. You don't feel like doing anything. That is level 1. Now, is that bad? For the most part, it is bad. But let me give you an instance where that might work. Let's say you just lost a loved one and you're grieving. You need that apathy. You need to feel like a victim to get over that grief. Sometimes you need to be taken care of. So it's not always bad to have that kind of apathetic or that kind of victim feeling. But if you carry that throughout your life, you can see how that's going to hold you back and how that's going to hurt you. Jake and I are always preaching, go out there, get what you want, make it happen. That's how we started out, make it happen. If you're a victim in level 1, you're not going to make anything happen. All you're going to make happen is you're going to want people to feel sorry for you, and that gets you nowhere, right, Jake?
Listen, at the end of the day, it's up to you. Nobody's going to do it for you. You cannot operate in level 1 mode. That's for sure.
You can, but you're going to be stuck there, right? Level 2 is what Jake and I like to talk about being called anger. Now, this level, that emotion is the anger emotion. The core thought in that level is conflict. You're always in an argument with somebody, right? And the result is defiance. Now, a lot of leaders work in this level at level 2 anger. They're like, they're despots. They're on top of people, pushing people. If you actually resonate at that level all day, you're going to burn yourself out. You're going to burn your team out. Now, do you need to get there sometimes? Yeah, you need to get there and scream at people sometimes and get them to do their jobs. But you don't want to resonate at this level all the time because you're going to be in conflict level and you're just not going to be able to produce long term.
I think also we've always we've all dealt with people that always want to say no. And it's the type of mentality where they don't like change, and these people may be in a managerial position, and you present them with something where this needs to change or this needs to get done, and there's always a conflict or there's a pushback, and that gets old after a while. So you don't want to be doing that all the time either.
It does, but the anger part I think can also be beneficial. See what's going on in politics right now. People are angry. So what does anger do? Anger spurs action. whether it's positive action or it's negative action, what's going on in this country. People are out there going to vote, voicing their opinions. Whether you agree with them or disagree with them, that's one thing. But they're angry, they're out there, and they're just taking action. See, if they're at level 1, like a lot of people are, they're not going to get out there and vote. They're not going to voice their opinion. But that anger at level 2 gets you out there. Now, level 3, you start moving up the levels, and you start, feeling more empowered. Level 3's core emotion is forgiveness. Now, a lot of people resonate at this level, and their core thought is responsibility. Now they're finally taking responsibility for their actions. This is where you want to start resonating at level 3. The action of the result is cooperation. Now, this is where a lot of people resonate at. They're becoming responsible. It's still a level where, I like to say, I win. And if you win, it's okay, but I'm winning, right? Level 2 anger was, I win no matter what. I don't care if you win, I'm winning no matter what. And level 1 is, I don't win, I'm never going to win. So you can see as you're going up the levels, you're going to start talking about this, I win, you win. Level 3 is, I win, I'm playing this game. And if you win, that's great too. But at least you're going up the levels and you're just taking responsibility for your actions. Now, level 4 is where you start working. I win and we both win. That's what's great about level 4. It's compassion, right? The core thought is concern. You're concerned for your person. This is where a lot of life coaches, a lot of people who are leaders really have concern and compassion for the people they work with. Sometimes people at this level are resonating at a higher level of energy. They're in the service mode. That's the result. But at the same time, they got to be careful because they can be taken advantage of because they're really looking out for everyone else. They're putting their heart and soul out there. But at the same time, you got to be a little careful because people can take advantage at this level. Level 5 is peace. The core thought is reconciliation. And the action result is acceptance. This is a great level of energy to resonate at because you're really starting to pump, Jake. You want to get up to go to work. You're engaged, right? You want to get up. You want to make things happen at this level. This is where you want to resonate at. Level 6, the core emotion is joy. This is where, the thought is synthesis and the result is just wisdom. I mean, you're playing a game right now. It's not even a game to you. You're just having so much fun. You're getting things done. Things are just popping off. This is why you want to raise your level of energy, because you got to have these thoughts and these ideas, just flowing through you. If you've ever had a situation where you've gotten into an argument, let's say me and Jake get into an argument right now. We're talking about politics and you just get, that anger gets into you. You drop back down to a level 2 of anger. What happens is you don't have these thoughts and these emotions flowing through you. Your brain just goes into brain lock. And you ever get that thing where like 10 or 15 minutes later you say, oh man, I wish I should have said that. Well, what happens is you're stuck at the lower levels and you can't think. You have no thoughts. You have no positive actions coming to your mind. So when you get into these lower levels, take a deep breath, step back, and just try to resonate at a higher level. Try to say to yourself, I'm going to make this thing happen. So at level 6 is just where a lot of these, Steve Jobs, a lot of these guys resonate at that level. They just got a lot of stuff going on. Level 7 is very, very hard to, you'll never really stay at level 7. It's absolute passion, non-judgment, and it's, the action or the result is creation. Basically, guys like Gandhi, resonate at level 7. They just with it, they just, everything's flowing to them. They don't have no judgments. They're here. They're not here. They're just at a different level spiritually. It's very hard to stay at level 7. You can bounce back through level 6, level 7, level 5. You're going to go up and down this self-perception chart. What I really want you to grab from this though is just see how you're resonating throughout the day. If you're really angry, start taking responsibility. Start trying to move up because as you move up, you're going to get more energy, and the more energy you have, the more engaged you're going to be when you're going to meet that broker, when you're going to meet that, that lawyer about the deal, or when you're going to meet a seller. You want to be engaged. You want to be fully there, and you want to be present.
It's almost about operating in the zone. You hear people talk about sports a lot of times, and they say he or she was in the zone. This is operating in a business sense, operating in the zone. If you are at those lower levels and you go to speak with a banker and you're trying to pitch an apartment deal to them, and you're in that level 2 zone, and it's it's someone else's fault. Well, I never really had the chance. Life never gave me the break that I needed. Do you think that guy's going to want to lend you money? But if you go in there and you say, I got this amazing plan, I know how I'm going to reposition this property, here are my plans, this is exactly how I'm going to do it, it's going to be great for everybody, let me share this with you, exactly how it's going to go down. That's the difference.
Yeah, I love that analogy, being in the zone. So I would consider being in the zone at level 5 and level 6 because things just start happening. And there's a reason why they happen, because I think people are aware what's going on. They say, I just got this, this mojo going today. I feel great. And things start happening to you. And what happens, what's really amazing, guys, just take just take into consideration what happens when you are at level 2. What happens is you attract that type of level energy, right? So when you go into a meeting and you're already angry, you're going to attract the anger from the other person. But when you're walking around with peace, with joy, you're going to attract that into your life. Just be totally aware of that. And that is totally how it works. Because Jake and I are on the same page. We've been partners for a long time. We attract the same type of energy. We come, we make it happen, we get things done. And it's no coincidence that happens, because when we're together, we raise each other's level of energy, and we get things going. And that's what you want to do. You want to raise your level of energy and we call it a buy-in. You want to be bought into the whole system.
And here's the thing: everybody gets knocked down. Things go wrong, and you get knocked down a few pegs. And there's, you get there, and you're like, oh crap! You're feeling like crap today. I didn't get enough sleep last night. I ate this cheeseburger, and it's making me lethargic. All these things, but you have to constantly work to raise your levels of energy and operate in the level 6, level 7 zone as often as possible, because you're going to feel better about yourself. Life's going to be going better, and you have to strive for those higher levels. At least that's what I like to do, because I feel better there. I'm getting more done, and I'm a happier person at the end of the day.
Jake, what I learned at coaching school was that the world, they took an average of what the world resonates at. The world resonates at a 1.8 between apathy
That's
and
sad.
That's really, well, you know what? Think about it. When you go to work, people are pissed off.
Yep.
When, people are really angry. So you see what's going on in the world, and you can say, well, it's obvious that it's going on. You never really think of it that way, but it's obvious that it's going on. Let me just give you one last thing. If you guys want a copy of this energetic self-perception chart, you can email me at Gino@jakeandgino.com. I'd love to send you one. You guys study it. When you're going throughout the day, pull it out. Have it on your dashboard. Have it on your, on your vision board. I see it every day, because I want to definitely see what happens when I get up in the morning. I definitely want to raise my level of energy and, get myself bought in and start my day great. So if you guys have it in front of you, make it conscious. Take a look at it and say, listen, this is where I want to be today. And it'll really make a big, big impact on your life.
It's amazing, because you look at what separates someone from being successful and not successful, right? And a lot of people out there, there's a lot of people that are super successful that are probably not very smart or good test takers, and then you had some people go through high school and they were honor students and all this. But what's the separating factor? And I think these levels of energy have a big part to do with it, because if you're positive, you're working hard, you're relentless, and you're always going to do what it takes, well, at the end of the day, you're eventually gonna hit it, right? And versus the person that starts to feel sorry, oh poor me, that type of mentality. It's pretty interesting stuff.
I love this stuff. Now that you guys have gotten a sense of how to raise your level of energy, what level of energy you want to resonate at, listen, we have to start creating a plan. So I'm gonna let Jake jump into what a plan is and how we're gonna start our plan.
Sure. So one of the things that really helped us out in the beginning, it took us a long time to get into our first multifamily deal, but one of the things that I think enabled us to actually close the first deal and start our career was a credibility kit. We call it a credibility plan, business plan, credibility toolkit. We throw some different names out there. But the key to this is that you have a plan, so whether you're speaking to a broker, a banker, or a potential partner to invest with you, you have a detailed plan to show them exactly how the deal is going to go, what the strategy is, how people are going to get their money back, how they're going to make a profit, everything bundled in one location so that there's no questions unanswered. I think that is the key to starting out, and then it is able to demonstrate exactly what you're going to do to the people that you're going to be working with.
I always equate it to saying, if you guys don't have a target, you're not going to be able to hit anything. Our credibility kit, when we designed it, all of a sudden our business plan became so clear to us. We call it in real estate, you want to pick a niche or any kind of business you're in. I'm a coach. Let's say you want to be a coach. Well, what kind of niche do you want to be? You want to be a life coach? Do you want to be a business coach? In real estate, Jake and I picked the niche of, buy and hold. We want to be buy and hold. So we niched it down even more. Well, what do you want to buy and hold? You want to buy and hold single family homes? You want to buy and hold mobile parks? You want to buy and hold multifamilies? So we decided to buy and hold multifamilies. So when we started designing our pitch book, the first couple of properties, we said, well, we're buying and hold multifamilies, but we niched it down even more. There's something that we came up with. I don't know if we came up with it, but I've never heard of it before. We called it mom and pop apartments. So the credibility book just made everything so clear to us. It said, wow, we have buy and hold investors who like to buy mom and pop apartments. And I'm going to let Jake describe what a mom and pop apartment is, because he's got the definition nailed down, because he deals with them every day. He's on them every day. But this is what this credibility book is going to allow you to do. It's going to allow you to really niche it down, make you understand your business plan. It's like your mission statement in real estate, what you're investing in. So if you're investing in single family homes, your credibility book is going to say, I invest in single family homes, but then why? You're going to have a strategy. Well, for cash flow, for appreciation, for fixing and flipping, whatever it is. But this is what the credibility book allows you to do.
Yeah, so what's in the credibility book? Gino just alluded to. We start our credibility book out with our investment strategy. So what is our investment strategy? Gino said buy and hold investors for multifamily apartments. But then we take it down a next level, and it's going to be mom and pop apartments. So we buy multifamily apartments. We're in there for the long term. We're buy and hold investors. But then we look to something even a little more specific that's different than other folks out there, the mom and pop. So what is the mom and pop? We look for small. It can be a family-run organization. It can be from people from out of state, but they're not. We're not going after these big organizations. We're not trying to buy from REITs. We're not trying to buy from these big companies. We're looking for small organizations that are dysfunctional. They have things going on such as high utility bills, deferred maintenance. They're not renting apartments out at market rate. They have high vacancies. So we look for these distressed assets that are run by small groups of people that have basically given up on them. They have other jobs. They know they should be investing in real estate, and it's the sexy thing to do or whatever, but they don't treat it as a business. So we specifically target these types of investors, and that's who we like to buy from, because that gives us an opportunity to reposition those properties. So that's the first step of our credibility book, is the investment strategy and exactly our specific investment niche.
There's a couple of the guys that Jake alluded to also. You know, we like to target investors or people who are motivated. Now, a mom and pop apartment owner is motivated to sell. So in real estate, you all know out there, the only way to get a deal is to get a deal from somebody who's motivated to sell. If they've got a nice asset and they're not going to want to sell it, there's no reason for them to sell it. You're never going to get a deal from them. I mean, you can go through our credibility kit. All of our investors that sold to us, they all had a motivation, whether they were a big company with a partner who had a fight, whether it was a family who had an infighting, whether it was people who wanted to retire, whether it was somebody who was motivated from out of state. That was the single thread that we noticed in our credibility book, and that's who we target. We try to target people who are motivated. And the other one is the people who are just burned out, motivated, burned out. They just don't want to be in the business anymore, whether they've been around for a long time or they want to be retired or they're just relocating somewhere else. These are people who are motivated. So it all comes back to that motivating factor.
Yeah, and just to throw a few more out there, there may be a family argument going on, or they may have inherited it, the complex from a family member, and these come in all shapes and sizes. I always say this: they can be 10 units up to 300 units. We've bought, our smallest one I think being 16 units, and our biggest being 281 units. But the common thread, all mom and pop owners, without a doubt. The next section that we focus on in our credibility book is a company overview. Now, we lay out what our goals are and who we are. Now, a lot of times people are going to shortchange themselves. You could, my background was in sales, right? Gino's background was a small business owner in the restaurant industry. Well, you can say, well, how does that relate to real estate? Well, listen, businesses, regardless of what they are, have some common core competencies. So we take those highlights from the previous experience and lay them out in the credibility book and talk about how that translates or relates to multifamily real estate investing. Gino was a small business owner. He knew how to run a small business. I had a lot of sales and marketing expertise, so I was able to market the properties well and turn them over. And you have to highlight those things, even if you don't have experience in multifamily. Take those experiences from your previous jobs and relate those to how you're going to use those skills that you've acquired in other industries to multifamily.
I like that.
Oh, thanks, Gino.
No, that's just a great way to highlight yourself, because we always put ourselves down, right? Well, I haven't been doing this that long. I mean, you all have experience. I mean, I like the fact that you're in sales and marketing. You know why? Because when you have to rent an apartment, you know how to sell the property. You know how to sell it, right? And when we go out and we market and we look for these deals, well, I can really pretty much read an income statement, a balance sheet pretty well, and I can tell you what the expenses should be. So we definitely have different skill sets, but those skill sets really help us in multifamily. So don't downplay those skill sets.
Never shortchange yourselves. The next section is the portfolio of properties. Now, this may be something where you say, well, I don't have any properties yet. Well, you know what you're focusing on, and you can even put something, you can omit this section, or you can say, you can throw your goals in there. In the next 3 years, I want to acquire 150 multifamily units, and specifically that's what they're going to look like, and put a picture of them in there. It's kind of, you can make it almost like your goal sheet or your interior vision board, and you can say, this is the type of stuff I'm looking at, and this is what I hope to own in this amount of time. So don't be shy. Don't feel down on yourself that I haven't done this yet, I haven't done that. Build yourself up. Everyone's got some past experiences, and you need to highlight those. And again, not to be too repetitive, but don't shortchange yourself.
I think this will motivate you to get your first deal, because as soon as you get your first deal, you've got credibility. You're in the game. And that's what it took us. It took us our first deal to get in the game. We didn't have a credibility book. We didn't have anything as far as a business plan went. We just knew what we wanted to buy. As soon as we bought that, I had a couple of the properties that I owned up in New York. So our credibility book got filled up pretty quickly. I had a couple duplexes up here. I had a commercial building. I had a restaurant where I had, tenants upstairs. So I filled it up in the credibility book, and, but it got us into our first deal. And even if you have a duplex, it doesn't matter. Whatever you have, throw it in there. Make it, you have one deal, you've got credibility. You're already at the races. And if you don't, this will get you going. This will make you want to get your first deal.
Yeah, and before we owned our first multifamily property, the first 25 units, we took the case study section and put Gino's duplexes in there. I wasn't an owner in those duplexes with him, but we used those in the case studies to talk about exactly what the buying process was like, what he did after he bought them, and how he raised the income and got those properties to cash flow. So if you truly don't have any case studies to showcase, you can again talk a little bit about what your plans are there, how you're going to do it. But once you get your first deal, even if it's a duplex, single family, put it in your case studies. Highlight exactly what you did, and that will go a long way in increasing your credibility.
Now, Jake has been talking about the case studies, and the case studies is the next section. And this is a great way for you to highlight your strategy. If you have 10 different properties, I don't think you have to put all your case studies in. Choose the best 3 or 4 or 5. You want people to get a sense for what you own. So, we always put our first deal in there. We've got 4 or 5 different properties in there. Our first deal was one of our favorite because it had in the case study so many things wrong with this property, and it showed so many different parts of our strategy. Our strategy with this property was we got seller financing. So that was a great way to highlight case studies, how we're raising money to our investors. We got seller financing on this deal. We bought a deal that was undervalued, that was on the market for a long time, from a mom and pop that had no systems in place, that had high expenses, and that had, income that could be raised. We had storage sheds in the property that we actually cleaned up. We started renting them out. So in this case study, it was a great, lesson for us to teach our investors how we made money on this property. We put the purchase price in, and what happened was 2 years later, we ended up refinancing this property. So we show our investors, the life cycle of it. 2 years later, whatever money we put down, we refinanced it, and we showed the before what we were receiving in income monthly, then the after what we were receiving in income. We show the expenses beforehand and after. So we're just showing the investor or the person reading the credibility book what we've done to this property, how we've transformed it.
Yipper. Next section to the credibility book is our competitive edge. And yeah, I don't even mind sharing with the listeners our competitive edge. And I'm going to go through a few things that we focus on. Number one, our core values. Our company's core values is that we have a positive attitude, we do the right thing, we serve the tenants with amazing customer service, we showcase our ethics in everything we do, and we drive results through hard work. So we put that in there. Those are our company's core values. Our purpose or our passion, we believe that renting is personal, and our tenants are our number one priority. Our niche, mom and pop multifamily apartments. And then you could even dive into a little bit of your marketing strategy. Our 3 uniques. We offer safe, clean, and affordable apartment homes. We offer a positive attitude and a high level of customer service, and hopefully our folks have high energy out there because we were just talking about that. And our third unique is that we don't care if it's always been done that way. We create our own way. We do things differently. I'll give you an example. In apartment industry, it's always been security deposits. We don't use security deposits. We do move-in fees that are comparable to the security deposits, and then therefore we're not holding anything in an escrow account. We're not having to mess with that and do the payback, and it works well for us. So, look, it's not going to work for everybody, but it works for us, and we try to create our own way. We have a proven process. We call it modern affordability. And what modern affordability is that we have a wall-to-wall inspection every time we go into the apartments, and that basically is going to look at things such as plumbing. It's going to look at your appliances, your flooring, your fixtures. It's going to cover all of that. From there, we go to our second phase, which is wall-to-wall updating. If the light fixtures need to be updated, we do it. If it needs a modern paint scheme, we do it. If the flooring's out of date, we do it. So this is our proven process called modern affordability. The third step is we make ready. We go in and they put the final touches on it. They're cleaning the apartment. They're doing all that. And then we go to our final walkthrough. The managers come through, sign off on it. And then from there, the fifth part to modern affordability is a touch point 1 week after the tenant has moved in. The manager will call up, how's everything going? We hope you're enjoying the apartment. Is there anything else we can do for you? That's the customer service. That's the proven process. These are the things you're going to have to think about when creating your business plan. What's going to separate you? How are you going to offer something that the competition is not? And finally, we have a same day guarantee. If you come in and apply with us within that day, and we don't give you an answer back if you're approved or not from your application, we're going to pay that application cost. So these are the type of things that separate us from the competition.
That was really, really comprehensive. I like that. I mean, you put that in your business plan and your credibility book. Someone's going to read that and they're going to be like, wow. You give that to a banker, and a banker is going to read that. I don't know whether he's going to read that or not, but if you sit down with a guy and you highlight all of that, they're going to know your business plan right off the top. They're going to know you're serious. They're going to know that you've got a great product, and they're going to want to lend you money, because basically banks want to lend you money to get their money back and to make a few bucks on top of it. So if you got that all laid out the way Jake spoke, the way he just, talked about it, a bank is definitely going to say yes. They're not going to say no to you, especially if the numbers work. You're not going to have any problem financing the deal. So that's what the whole idea of this credibility book is, to give you an idea, to help you build systems, and to also be able to relay your message to people you're trying to pitch this deal to, whether it would be raising private money, whether it would be trying to get another partner, whether it would be going to a banker. That's key. That's
Gino, you answered your own question, because what Big Daddy Saporito say to us, our banker there, about the credibility kit when we asked him if he read it?
Yeah, I mean, we did a whole podcast on him. He actually did read it. I mean, you threw it on the table, he read it, and he was really impressed with it. I mean, he said, I don't think, Jake, he said nobody has ever put something like this together, right?
That's right. And he said that was one of the separating factors that they decided to lend to us in the beginning, when we didn't have as much credibility, because we were able to show that comprehensive plan. We did it. These things are not hard to do, but people, for some reason, they refuse to do it because it's that little extra work, right? And for whatever reason, they don't want to do it. Look, that's up to you. If you want to be successful, you do the little extra things that it's going to take to really explode your business. And the credibility kit in the beginning, it's very important for you folks getting started.
Well, what's great about it is it's also if you don't get the referral. I mean, when you're doing business and you get referrals, it's a lot easier to do business. You walk into a banker and you've gotten a referral. But if you're walking off the street and you have no money with this bank, and all of a sudden you say, I want to do business with you, I want to open up a couple accounts, but here's my credibility book. You're one step ahead of the game, because you already put something in front of him that he's never seen before, and you've got a plan, and they love to see that. Bankers are risk averse. This is just shedding some of the risk away from them, saying this guy's got his stuff together. I mean, anyone can own 100 apartments all over the place, 20, but if you don't have a plan on how to run them, and a bank sees that, bank is less likely to lend to you. So this is what we're trying to convey to you, that it's really important to have this plan.
And they're going to ask you those questions. Why should we lend to you? Why? How are you going to make this deal work? Why are you going to be successful? And after you develop that relationship, it's not going to be this intense all the time. But in the beginning, they're going to vet you. They want to know that you're going to be able to pay them back.
And what's great about it, Jake, the credibility book is 17 pages long, hours. Somebody can have it 10, 12, whatever long. Jake and I wrote a book called Wheelbarrow Profits. Now, we're wise guys. We'll go to a bank and we'll say, here's our business plan. Read the book. No bank is going to read a 170-page
Right.
book. I still think it's funny. We took it to the next level, right? Because our book outlines in 170 pages our, 3 pillars of success: buy right, manage right, finance right. So we broke it down even more. But what I'm trying to just joke around is bankers will read 10, 12 pages. So this is why it's crucial to get this in front of them.
And when the banker, you're probably going to deal with a vice president at a bank. He's going to have to take that to his boss, and that this thing is going to get passed up the line so that whoever's doing the final review or confirming the loan, they're going to see this. So it's not going to just stop with the guy that you're dealing with, because a lot of times those guys are involved in sales. They're not involved in the underwriting. There's going to be other folks that are going to see this. So take it seriously.
The next part of our credibility book is our keys to success. Now, in the keys to success part, you want to have, your sound plan in there. You want to have, the team that you're putting together, that you're constructing. You want to talk about also, in our book, we talk about the market that we're in. We're in a great market. Knoxville is a great market. I would consider it still an emerging market. Unemployment is low. Jobs are coming into the area. I did research, Jake, the other day on job growth. Job growth is 2.6% last 2 years in Knoxville. That's fantastic. Anything above 2% is great. Put that in your credibility book if you have that. Put population growth. I mean, you should be investing in this type of market anyway, in an emerging market. That's where you're going to crush it, make a ton of money. But put why you're investing in that market. Put the demographics in. I mean, we have a great demographic in our area. We have a lot of renters. This is what you want. The more renters, the more demand you're going to have, the higher rental growth you're going to get. So if you put that in your credibility book, bankers know that you see that the rate of rental growth is going to go higher. That's how you make money. You're going to be able to get 3 or 4% a year. It's a hedge against inflation. So when your expenses rise, your income is also rising. But you put that in there, you seem so professional. And the last thing is just we cater to the niche tenants. That's why
that's huge. We
have a success, because we know who our customer is, and we know how to cater to them, and we know what they want. You want to we're trying to really build a community in our properties, because when you build a community, you give a tenant referral fee to somebody bringing in one of their friends. That's where you're going to make money, and you're going to keep your tenants, because one of the biggest expenses in multifamily is tenant turnover. If you can eliminate, you'll never eliminate it, but if you can really, really reduce it, that'll really reduce your costs. You want to keep the same people there, 3% rate bump every year. You want to keep them at market, but you're going to, give that quality service. That's what you want. So you really have to know who your tenant and who your customer is and serve them.
Yeah, the niche tenants is huge. We like blue collar retail workers the retail service industry type folks, because we have C plus B minus apartments for the most part, and it aligns perfectly with their pay, and they're good hardworking people, and we try to offer those safe, clean, affordable housing to really make it a good fit for everybody. But the niche tenant is huge. You got to know who you're going after.
I'll give you an example. We're purchasing a 156-unit property in the next couple of weeks. We're going to be closing on it. That specific tenant is different than any of our other tenants. We know what they want. They're more of a millennial tenant, more of a professional. On that property, we're going to try to build a community. We're going to put a barbecue area. We have a dog park that we want to put into, because we know there's
tons of dogs in the area, yeah.
Right? We want to be able to put a laundry facility all together. We want to be able to upgrade the clubhouse and put workout room in the clubhouse overlooking the pool, and we want to upgrade the pool. We want to have Wi-Fi for these tenants. This is the type of tenant that we know that's what they want. So we're going to build a community around that. And in your pitch book, write that. And if the banker or anyone sees that you're actually targeting the specific tenant, you're going to have so much more success being able to raise your rents, being able to maintain the tenants in the apartments. That's what you're looking for. So try to build a community within every property you have.
No, that's a great point, Gino. The next section to the pitch book we call the investment life cycle. Now, our specific investment life cycle is you're going to buy the property, and because we're buying mom and pops, we're going to reposition the property. Through that reposition, we have a 3-step process where we're going to fill the vacant units in market rents. We're going to implement RUBS, which is a ratio utility billing system. We're going to bill the tenants back for their water, essentially. And when these 2 phases are done, we're then going to go back to all the under market tenants and raise the remaining renters to market rate. From there, the property, we have forced the appreciation. property is going to be worth more because we've reduced the expenses, we've raised the income, and now what we're going to do is we're going to refinance the property and take the money out that we put in initially, take that money out, and then reinvest that money into the next property. So we're essentially duplicating the process. Gino likes to call this the velocity of money, which I think is great. Gino, you want to touch on that?
Yeah, what I like about this whole life cycle is make it a simple chart. It's A, B, C, D, E. Make it so people can read it and they can follow it real easy with their eyes. Buy, reposition, increase, implement RUBS, raise remaining rents, refi, and duplicate. It's really simple. Somebody sees that. Even if you haven't done this yet, this is our strategy. We didn't do this up until, about a year ago when we refied our first property. But this is what our life cycle was. So when the banker saw that, he's like, oh, okay, I get that. You want to buy right, obviously. So that's what you had to do. We bought right.
They want to know what this plan is too, long term. Yeah.
And you have to know what the plan is. So if Jake and I were putting this thing together and I'm like, dude, I don't want to refi, I want to blow this thing out, I want to flip it. Well, that right there is going to tell you this is not going to work. So maybe you're going to, you can actually avert disaster by not going into partnership with somebody because you have different goals or different ideas. But once you write this life cycle down, for us, this works. Jake talked about the velocity of money. Basically, that's what banks do. Banks borrow money from us and they re-lend it out. They're velocitizing it. It's not even their money. They're using other people's money. And that's what we're doing with this system. So on one of our big deals, we refied. We had about $800,000 into this property. We had bought it, and it was about 18 months after we had purchased it, we went to refinance the property. We had pulled out $1.6 million on this property. So you see the velocity of money where we had $800,000 down into the property. We had increased the income dramatically. We had reduced the expenses dramatically. And also it's an emerging market. So, values are going up. So that played in our part. But, I guess we can call us lucky, but at the same time, we were looking at the demographics and we understood what was going on in the market. That's why we took a chance with Knoxville. So you can see the velocity of money. We have an extra $800,000 that we did not put into this deal. Just come back to us. So that is basically a property that has almost zero risk. It's recourse loan. We want to pull it off into a non-recourse. Then it'll make it a truly, risk-free asset, because a non-recourse loan, basically, you have no recourse. All they can go after is the property if you get into trouble and you don't pay your note. So we're not going to have any more money left in this deal. We actually pulled money out of the deal, and we're going to invest that money into another deal. Don't go on a vacation. You can spend a few bucks, but make sure most of that money goes back into another property. And you can see the power of that. You've got, you're starting to build your portfolio with money that you've already leveraged from another property. And the property that we leveraged, we pulled $1.6 million out. It's still cash flowing great. I mean, it's not like we took it out and we're cash flowing great on the property. So we have a cash flowing asset that is throwing off a yield every year that has no money left in the deal, and we're moving on to the next asset. And you can do that 1 or 2 times a year on nice sized properties, even small properties. You can see at the end of 5 years, you can have a sizable portfolio with none of your money in it that's cash flowing properly, and you're going to have money left on the side as seed money to continue your investment. Now, guys, don't over leverage yourself. Make sure that the numbers work. Make sure that you don't pull out too much. The bank is not going to allow you to pull out too much. What we did is we pulled out $1.6 million. The bank actually had us put money into a capital expenditure account, which was great for us. It was our own money. We reinvested right back into the property. We fixed some driveways. We did some painting. So they're going to make you do that. But at the same time, we have no money left in this deal, and we bought another property with this money.
Gino's being modest. He said that we got lucky, but in all reality, we followed our business plan. We bought right. So we bought the property extremely well. We got it for a low price. We bought it right. Numbers worked from day one. Then we managed right. We went in. We filled the vacant units in market. We implemented RUBS. And we've raised the remaining renters to market rates. So we're managing right. We managed through our reposition. We got the income up. We forced the appreciation. And then we financed right. We went in, got a longer-term AM, got a lower rate, and then pulled out double the amount of money that we put into it. So this is why this framework is so powerful: buy right, manage right, and finance right. It's a 3-legged stool. You gotta follow these 3 pillars. You got to get them right. And that's really the overview of multifamily real estate investing. If you get those 3 things right, you're going to be very, very successful.
Jake, let me jump back to the energetic self-perception chart for 1 second. When I said lucky, I meant to say that we bought this deal from this seller, right? I think we were resonating at a higher level. We didn't want to beat him up. We know we could have gotten an extra 50,000, 100,000 off, but I think me and you realized, let's try to create a win-win here. And not only do we create a win-win, we created a business relationship, because a year and a half later, we end up buying a property from him. What happened, Jake? I would call it luck, but at the same time, we kept the channels open. And what happens? Something happened that we just hooked up with him again, right? We just
no, he called us. He called us because we kept that relationship. We were good to him throughout the close. Everyone, was friendly at the closing of that deal. And then, I guess it was about 2 years later. He was liquidating all his assets. He was a doctor. He wanted to get out, and he called me up and said if I was interested in his last property. He didn't want to pay a broker fee. So I said, yeah, let me talk to Gino about it. Took back, what he was asking for, and basically said, look, we can't do it at that price, but we're not going to retrade, and we're going to get you out right now at a lower price. And then we bought another deal from him, and the deal we just bought from him, Gino actually was talking to me before this podcast, and he said, did you see the apartments around the corner from this one that just sold? Because I think, what is it, $22,000 per door more than we paid for the ones that we have?
Yeah, it was over $20,000 a unit more, and
and we bought these 4 months ago, 5 months ago, something.
Yeah, like that. Yeah. I mean, yeah. It's just going back to creating that win-win relationship. Don't beat everybody up. Leave some money on the table for the other guy, only because I think you want to be able to. Real estate is relationship based business. We attracted positive energy from this guy. This guy would not have come back to us. He would have gone to somebody else. Everyone always says, how do you get these deals? How do you get these deals? They're not on the market. Well, that's how you get them. You get them from being a good person, from being, I would say, compassionate, but understanding what he wants to do, and having concern for others, and trying to create, I keep going back, trying to create that win-win relationship. If we beat him up, he would not even bother with us. Somebody else would have gotten this deal at that price. I guarantee that would have happened. If not, that's why he came back to us, because he knew that we were, willing to, meet him halfway.
Be likable. People want to do business with people they like and respect. It's not meaning, lie down and die, but, be likable and try to do the right thing at the end of the day, and things will come back to you.
I know I went off on a tangent on that, but I think it's really important, because a lot of people always ask us, where do you find these deals? Well, that's one of the ways you find deals, is just trying to be a good person, a good business person, and not trying to screw anybody over, and trying to, create these relationships. And once you create these relationships, we have a really great relationship with the broker. Broker brings us deals. Why? Because we do what we say, and we say what we do. And that is really important.
So moving on, the next section is the why we invest page. So our investment objectives are high cash-on-cash returns. We're looking to build wealth. We're looking to build passive income. Looking to use the tax advantages in real estate, and gain equity through leverage. Right, we're looking to use that OPM, other people's money, use the bank's money, let the tenants pay down the mortgages, and therefore it'll enable us to create wealth.
We don't put anything on this page about what kind of cash-on-cash returns. I guess you can. I mean, if you want to be really specific and really, make them say, wow, this guy really knows what he's looking for. We look for 10% cash-on-cash returns. That's what we look for. If you want to look, even put down why we invest, we're investing for ACAPs. That's what we want. We want to get 8% on our money. So if you want to be really specific on this page, you can. You can do that.
The final section is about the investor, right? Here you're gonna just give you put your bio down. You're gonna put how people can get a hold of you, and anything else that you want to put in to the pitch book to close it out.
How are you going to use this with brokers? Very easy. You want to email this over to them. They have a deal for you. You can email this over to them, and they'll be like, wow. So this will be really specific for them. They'll know exactly what you're looking for, which is great. They're not going to send you a 10-unit mobile home park if you're looking for single-family homes. So you're not going to waste their time. They're not going to waste your time. It's like an acquisition criteria sheet. Your criteria is laid out in this credibility book. They're going to know exactly what you want.
The key to this is get on your local area association of realtors page. Find out who the top 5 to 10 multifamily brokers are in your town, in the area you're looking to invest. And when you're done with this, Email it to all of them. Sit down, take them out to lunch, show them this, because everyone in Knoxville knows when they get the mom and pop apartment, they come to Jake and Gino because we're closers and we get it done. We've got this credibility book out to all the brokers in town that really are the multifamily players, and it works. And when they have something that fits in our wheelhouse, they bring it to us. That's another way. People say, well, how do you get deals? That's the way we've got a lot of deals. It doesn't have to be on LoopNet. It can be a pocket listing, and that's the way deals will start coming to you.
You know, we've been talking a lot about the credibility kit. If you want to take a look at what one looks like, we've gotten ours done. I mean, you can get somebody to design yours. We had a simple one first. We did a PowerPoint presentation. It looked good. It didn't look that bad, actually. I give Jake a lot of credit because we're really both bad at computers.
Come on, man. We're great.
The fact that he put this thing together, I was like, wow, that's pretty cool. We actually ended up getting it designed. It cost a couple $100. It was the best $200 I think we ever spent. We're going to have it on our website. So if you go to jakeandgino.com, you'll be able to click on our credibility book. You take a look at it. You go through it step by step, page by page, and you'll be able to access it. We have a product on udemy.com that sells the credibility book. We have a credibility course, how to build it. It's really a valuable course. It's on sale right now for $47. I think if you buy it, you'll see a bunch of videos on there. It'll have a template on how to build it. I think it's a great product for you to buy if you want to start building your credibility book.
And the last two people that you're really going to, or two professionals that you're going to want to use this with, your bankers. You're going to want to outline the strategy, outline how the bankers are going to get the money back, how you're going to reposition the property. That's very important to them. And then you can also use it with potential partners. If you're starting out and you're limited on capital, but you know you have some high net worth friends or people that want to invest in multifamily, this is a great product to take to them and say, here's my strategy. This is the money that you're going to make. This is the equity you're going to get. This is how you're going to get paid back. Very important to have that, or you're probably going to have a hard time selling somebody without being able to show them exactly how they're going to get their money back, right? Gino, great information today. And to the folks out there, we hope you've enjoyed this special edition of the Wheelbarrow Profits Podcast. Check us out next time when we discuss how to build your team.
We trust that you enjoy the Wheelbarrow Profits Podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.